Yeah, good morning everyone. Yesterday we saw US market has corrected marginally and futures are also a bit soft today morning. But whereas if you see the Asian market, most of the market are positive except Hong Kong and China, which are trading negative. Otherwise, Japan, Korea, Australia, New Zealand, all are positive between 0.5 to 1%. Apart from that, if you see the commodity is also showing a positive trend today, wherein oil is though down from yesterday level of around 93.5 to around 92.5, but others of commodities like aluminum is up by around 1.5%, or is iron ore is up by around 3%, and steel is also up by around 1.5%. Copper is flat. So more of a positive trend seems to be visible. We had seen yesterday a sharp correction in the Indian market, so may see some bounce back on that count. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is today the market. Today the market is likely to open on a negative note, and we are likely to witness some selling pressure during the day. On the technical background, today the Nifty has a strong support at around 17,170-140 levels. Any move below that level on the closing basis will extend the selling pressure, which might take a Nifty towards 17,000 levels. Below that level, 16,940 levels can be seen. Whereas on the higher side, 17,270 will be the immediate resistance level. A positive closing above 17,270 only will witness some sort of a pullback rally towards 17,340 to 17,400 levels on the higher sides. As of now, looking towards the technical pattern, the selling pressure is likely to be seen into the market for coming 1 to 2 days. As long as Nifty trades below 17,240 levels on the closing basis, we will not able to witness some positive move into the market. Towards the Bank Nifty on the technical front for the today intraday purpose, the support is placed at around 37,800 levels. Below that level, 37,600 and 500 levels can be seen. Whereas on higher sides, 38,470 will be the first resistance. Above that level, 38,850 levels can be seen. The overall view on the market will remain a cautious to bearish itself as long as both the indices trades below the resistance levels. Coming towards the Nifty Finance, for the today intraday purpose, the resistance is placed at 17,670. Any more above that level, we expect some positive momentum into the Nifty Finance, which might take the indices towards 17,980. Whereas on downside, 17,140 levels can be seen. Below that level, 16,940. So these are the important support and resistance into the market. The overall view remain cautious, avoid major long positions at the current levels. Let the market settle down at the support levels, then we can initiate a fresh buy calls or the sell calls. As of now, that's it from my side. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, overall open interest has increased by 10%, almost 10% yesterday, with a decrease of about 300 points in Nifty. So that is short built up and not a very good sign. But the only real thing is the PCR has dropped below 0.8. So it's at 0.7 odd level. So a lot of call writing has been seen. And that is the only helpful parameter at this point of time. Even the cost of carry has reduced and VIX, as I said, has increased. It will continue to remain in between 18 to 24, 25 levels. It has come up towards the 20.50 levels. So that is also a negative. With the increase in VIX, you are going to see such selling pressure coming in further, and now the base has shifted lower towards the 17,000 levels. In fact, it has also gone lower further. The highest open interest is now at 16,500 put strikes. So very likely, if you see a fall towards 17,000, you will see liquidation coming in the 17,000 put, and further selling can come in. So it is better that, to remain light at this point of time. 17,300, 17,400, 17,500 levels all have considerable amount of open interest, indicating resistance at every 100 points on the upside. So looking at the stock specific front, only GNFC witnessed some good amount of open interest built up. Other stocks at this point of time not looking that lucrative. Also, there was some selling in the banking sector yesterday. Some shorts were built in, so next 1 or 2 days you will see further selling coming in into the banking sector. And metals also, which were strong, you're seeing some amount of selling pressure coming in from the highs, and some open interest being built in around the highs. That means some short built up has been made. So overall, the two sectors which are holding on, banking and metals, are likely to witness some amount of profit booking in the next couple of days. So booking profits and staying on cash, or probably going short, can be a better option going forward. We expect Nifty to retest the 17,000 levels soon. After that, we got to see what really happens. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. So on life insurance, after reporting encouraging volume growth in December, January AP growth for the industry moderated to 7% year on year. This is mainly because of the third wave of COVID. If we look at companies, then SBI Life grew in line with industry at 8%. If we look at last 6 months, SBI Life has been outperforming its peers. Whereas on the other hand, all the other three pure insurance companies, Max, ICICI and HDFC, underperformed the industry. Max posted a decline of 23%, ICICI Prudential decline of 7%, and HDFC growth of 4%. So expect in the near term SBI Life to continue its outperformance as the case has been in recent months. Union Bank of India result was above expectation, mainly because of improvement in asset quality. And also after many quarters, we saw sequential growth in loan book of around 6%, which is encouraging. Although they have guided that next year loan growth could be around 11 to 12%. And credit cost could fall to 1 to 1.5%. So which is a good sign and indicates that ROA can move closer to 1% levels over next couple of years. Sundaram Finance result declined. Gross NPA came at 7.7% against 3.5%. So almost more than doubling of gross NPA. This is because of the change in RBI norms. However, if we compare this asset quality with peers, in case of Chola, the increase was less than 2%, and for Shriram Transport, just 60 basis points compared to 430 basis points for Sundaram Finance. So expect muted performance from Sundaram. Thank you.
Good morning, everyone. Biocon Pharma has received USFDA approval for its ANDA for posaconazole delayed release tablets. This is product indicated to use in the prevention of certain fungal infections. So this would add to the Biocon's portfolio of vertically integrated complex drug products. This is marginal positive for Biocon. Adani Wilmar is getting listed today. It is a leading agri-business company getting 82% of revenues from edible oil, which is sold under the brand name Fortune. The issue price was rupees 230 per share, and the issue was a fresh issue to raise 3,600 crore rupees to repay long-term debt and to fund the capex. We had advised to avoid this issue because of the expensive valuations it was asking at the price. TCPL packaging has posted improved results. Sales grew by 14% YOY, and margins have came at 15% versus 15.6 and Q1Q 14.2. However, on the absolute numbers, if you see, this is a good numbers. GlaxoSmithKline Pharma, that is GSK Pharma, has announced the results, and results were marginally below expectations. Sales was flat with growth of 3%, and EBITDA margins were at 24% versus expectation of 22. But in absolute numbers, if you see, this is lower than the expectation, and in fact, the last quarter. Camlin Fine Science has reported improved results. This is after a long time we are seeing that company has posted good results. The sales grew by 28%. In fact, the EBITDA margins have also came at 14.5 versus 7 last quarter. Uh, that's all from me. Thank you.
Good morning, everyone. Nuclear Software has posted declining set of numbers for the quarter. RSWM has posted improved set of numbers for the quarter with revenue growing by 5% Q on Q and EBITDA margins came in at 11.5% versus QOQ of 10.9%. Stock is trading at a PE of 6 times TTM EPS. Thank you.
Good morning. So TVS Motors announced its results. The results were better than expectations. Revenue grew by 6% on a YOY basis due to higher price hikes and a favorable product mix. EBITDA was at 10%, led by strong cost reduction efforts. The company indicates that the semiconductor challenges led to lower sales of premium products, but the situation will improve gradually in the coming quarters. The company expects to navigate through the commodity cost headwinds on the back of better product mix, price hikes, and sustained cost reduction initiatives. The exports for the company was good, and the management indicates that demand momentum is likely to sustain. On the EV business, the company has indicated that the company plans to have a monthly capacity of 10,000 units by first quarter of FY23, which was actually planned for the fourth quarter FY22, but was delayed due to the semiconductor issues, and indicates further aggressive capacity expansion in FY23. The company has a planned capex of around 750 crores for FY22 for its EV business and other products. The share is trading at a PE of 22.6 times FY23 EPS. We are positive on the stock. Thank you.
Yeah, a few more results. Yesterday, Novelis reported results. There is a subsidiary of Hindalco, and results has shown some decline quarter on quarter. Revenue came in at the volume came in at around 930,000 ton. That is 930,000 ton against last quarter 968,000 ton. And revenue has come higher at because of the higher prices of the aluminum at 4.32 billion against last quarter 4.12 billion. EBITDA per ton declined quarter on quarter from around $571 last quarter to $544 in this quarter. Year on year, it remained more of a flattish EBITDA per ton, but quarter on quarter, it's showing some declining trend in this quarter. So may have some impact on Hindalco today price wise. Then Nestle Aluminium declared the results, and results were marginally below expectations, though revenue came higher than what was expected at around 3,450 crores to 3,770 crores. But EBITDA margin and EBITDA declined against expectations. The expectations of the EBITDA was at around 1250 crore and it has come at 1190 crore. And EBITDA margin expectation was 36%, which has come to 31%. So margin has come off. Alumina prices, which is the key profit driver for the company, the prices has corrected from $950 to $425 in last quarter, but on an average they got higher realization. Now December the realization is at bottom, and now again showing sign of improvement from around $425. It has already moved up to around $500. So there is a lot of volatility in the prices of alumina, which is having knee-jerk reactions on the performance of the company. Jindal Stainless came up with the number here again. Volume declined quarter on quarter from around 2,56,600 to around 2,47,600, and that has resulted into some sort of flattish type of EBITDA for quarter on quarter, though EBITDA per ton has increased by around 2,000 rupees quarter on quarter. So overall result is more of a neutral type of numbers are there. Then yesterday Tata Steel had a con call, and in that company has indicated that Going forward in Q4, the company will be facing decline in realization of around 3,500 per ton in India, that is domestic operations, and also the cost of coking coal will increase by around $40. So both these together will have an impact on EBITDA per ton of around 5,300 in domestic operation, whereas the European operation will see improvement of realization of around $15, and coking coal prices uh, negative impact of $40, but positive impact of iron ore of around $30. So all these three together will have a positive impact on EBITDA per ton of around $40 in Europe. So if we consider both India and Europe together, the EBITDA is likely to decline by around 8 to 10% quarter on quarter in Q4. But what we are seeing that of late, steel prices has shown some positive trend in the recent past, and coking coal prices, which are at somewhere multi-year high at around $445, can see some corrections. The expectation is that the prices are too high and can correct anytime. So if the coking coal prices start correcting, that can support the prices of Tata Steel. So overall, mixed bag of outlook from here. So more of a neutral for Tata Steel from here. Then result for tomorrow. About India is likely to report number, and results are likely to show a steady growth of around 12% year on year, both in revenue and EBITDA. So results are likely to be okay. ACC is likely to report number. We had seen most of the cement company are showing a declining trend in the EBITDA per ton in quarter on quarter of somewhere around 150 to 200 rupees. Here again, the expectation is that around 150 rupees decline in EBITDA per ton quarter on quarter for ACC. Aurobindo Pharma again likely to report more of
नहीं ऐसा नहीं बोला मैंने तू अलग सोच तो समझता ही हमेशा उल्टा
Swati, hello, yeah. Uh, Aurobindo Pharma is likely to report number, and numbers are likely to show some declining trend year on year, and revenue and EBITDA both are likely to decline by around 4-5% year on year. So more of a declining set of numbers from Aurobindo Pharma. Then Berger Paint is likely to show improved set of numbers. The margins are likely to increase by around 200 pips quarter on quarter, and revenue is also likely to increase by 20% year on year. So overall, Berger Paint is likely to show improved set of number. Bosch is likely to report number. Here the margins are likely to remain more of a flattish, and revenue is likely to increase by around 18% year on year. So more of a okay set of number considering auto sectors soft performance in Q3. This seems to be comparatively better number. Engineers India is likely to show improved set of number. Here the margins are expected to improve both quarter on quarter and year on year to around 12.5%. Then Petronet LNG is likely to report number. Here again, the result is likely to show declining trend, mainly on account of decline in the margins. Margins are likely to come off for both quarter on quarter and year on year. Quarter on quarter, it is likely to decline by almost by around 150 bips quarter on quarter, and EBITDA, absolute EBITDA is also likely to decline by around 10% quarter on quarter. So declining set of number for Petronet LNG. Power Grid Corporation is likely to report more of a okay set of numbers. Revenue and EBITDA are likely to grow by around 5% year on year. Then SKF India is likely to report number. Here again, the results are more of a okay set of numbers. Margins are likely to remain flattish quarter on quarter, though year on year it will show some decline. Because last year, same quarter, the company had enjoyed very good margins, but now it will be reporting around 16% EBITDA, which is their normal margins which company generally report. Then Solara Active Pharma is likely to report declining numbers both quarter on quarter and year on year. EBITDA is likely to decline by around 34% year on year and 4% quarter on quarter. Then Tata Power is likely to report number on tomorrow. Here again, numbers are likely to be more of a okay set of numbers. Then SAIL, that is Steel Authority of India, is likely to report numbers. So numbers are likely to show decline. both quarter on quarter and year on year, mainly on account of increasing coking coal prices and lower volumes. So EBITDA per ton is likely to decline by around 4,000 rupees quarter on quarter, from 16,000 to around 12,000 rupees. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.